last year, cryptocurrencies burst onto the scene. The value of Bitcoin increased exponentially. From less than $1,000, the cryptocurrency rose to more than $19,000 per coin late in 2017, before dropping down. But buying into cryptocurrencies can be intimidating. Prices have fallen, markets are volatile, and many currencies are unpredictable. But investors looking to score on the cryptocurrencies market in the regular brokerage account are in luck. Chain Technology Inc. (TSX), Cash V, OTC, HSSHF, is a Bitcoin miner and blockchain innovator with a wide exposure to a wide range of crypto assets. Buying into Cash is a bit like buying a crypto ETF. You get the value of the sector's growth without having to invest directly in crypto or understand this new asset class. Even with crypto prices falling from the incredible highs of 2017, Bitcoin and its brethren are here to stay. Investors could use a firm like Cash to give them exposure. Plus, Cash is working on the future of crypto too, including proprietary regulatory software to bring greater security to those using it. In the highly profitable world of crypto, this is definitely a company worth looking at.
Here's 5 reasons investors should get excited about Chain Technology Inc. (TSX), Cash V, OTC, HSSHF.
The crypto mining sector, which scarcely existed 5 years ago, has become multi-billion-dollar industry. By mid-2017, crypto miners had earned $2 billion. But that was just the beginning. At the height of the crypto boom in late 2017, miners had made more than $50 billion measured in value of cryptocurrencies then. That's a 2,500% increase in less than a year, although that increase has now fallen from peak prices. The top 25 crypto projects have provided major value gains for buyers of coins. The currency Verge, for example, delivered a return of 257,000%. In the last year, most cryptos have seen their value shoot through the roof. And investing in Cash is a great way to get crypto mining exposure. Investing in crypto mining is like investing in a gold mine. The miner delivers product, deducts costs, and delivers a return. But even gold miners have only been able to deliver an 11% return in the last year. Crypto miners like Cash could make gold mine returns look minuscule. The company has big ambitions and intends to dramatically scale up its operation. Right now, Cash has 870 mining rigs, and the company has a commitment for mining up to 20 MWs in a facility in Montana. The company is also set to purchase an additional 5,000 rigs. Combined with its current rigs, Cash should be able to mine 8.7 megawatts. To put that in perspective, when the crypto miner Hive started out, they had a capacity of 4 megawatts. The company positively exploded late in 2017, and for a time had a market cap of $1 billion. When Cash scales up, it could be the biggest crypto miner in the business.
It has a market cap of $45 million, but once its committed Montana facility space is fully utilized, it should be able to mine 20 megawatts. https://web.tmxmoney.com/quote.php?qm_symbol Cash, but that's not all it's got going for it.
Or don't have the time to research the variety of cryptos available to invest in. Owning Cash, TSX, Cash V, OTC, HSSHF, could be a solution to that problem. So, not only do they provide mining exposure, but they also provide exposure to tokens too. How? The company has holdings of the Dash crypto coins, now worth a lot more than Cash paid only a few months ago. A key currency in the company's portfolio is Dash. The company also owns a Dash masternode, which Cash acquired after a $280,000 investment in 1,000 Dash coins, which is now worth $560,000. The Dash network currently rewards masternodes at a rate of 6.67 Dash per month. That gives Cash a steady stream of income. Ownership of a rare masternode has been giving Cash a return on its masternode investment of 8%. Dash is a smaller currency, but it's growing fast. With a market cap of $4.2 billion compared to Bitcoin's $135 billion, Dash is being produced at a rate 8x that of Bitcoin. Greater processing power for Dash means that Dash transactions happen in a matter of seconds. It can take several minutes to process a transaction with Bitcoin. Click to enlarge. The leadership at Cash knows the Dash cryptocurrency well, and is prepared to capitalize on it. Perry Wooden, the head of the Cash Advisory Board, also sits on the advisory board of Dash and has more than 20 years of experience in managing web-based applications. CEO Patrick Ray is a tech pioneer. He sold his first startup to Xerox for $220 million, and he's raised millions for a number of successful ventures. The goal of the company, according to Gray, is to give investors access to a lucrative market that they can't take advantage of themselves, ownership of mining, the Dash masternode, as well as a planned diverse portfolio of other cryptos, gives Cash a solid base and strong prospects for profitability. Cash recently announced the acquisition of the business of Node40, an experienced blockchain firm, for approximately $8 million in cash and stock consideration. Node40 is a cryptocurrency exchange management software that delivers up-to-date information on the changing state of crypto. Regardless of changing prices, Node40 will give Cash an edge on navigating the crypto market. The company's stock in some ways functions like an ETF for crypto mining. Investors will get exposure to a valuable index of cryptocurrencies, without taking on the risk of picking and choosing specific volatile coins.
And things may only get better from here.
In 2017, there were at least 27 unicorns, or billion-dollar startups in the financial technology or fintech sector. PwC reports that major financial firms are partnering with fintech companies at a higher rate than ever before, hoping to harness new technologies to lock down more business. Blockchain and cryptocurrency form an important component in the fintech revolution. The opportunities for investors grow greater and greater every month. One Wall Street analyst recommended investors be ready to see billions surging into crypto, fintech and blockchain assets. Get ready for an explosion. In December, Bitcoin futures were launched on CME, the world's largest futures exchange. Futures also began trading on CBOE, another large futures exchange, and it may not be long until it debuts on the Nasdaq. There's talk of cryptocurrency hedge funds, particularly one featuring Ripple, one of the most competitive cryptos. Pretty soon, cryptocurrencies are expected to be integrated into the financial system, to the point that everyone, including the reader, will have a stake in the blockchain of cryptos. But while Wall Street wakes up to the potential of cryptos, Cash offers exposure that is not available in most other single companies.
And Cash is also looking to the future. That's because Cash, unlike other crypto firms, wants to be part of the coming regulatory landscape.
Through its recently announced acquisition of Node40, the company is focusing on developing accounting software that can integrate directly with the crypto market with certain major cryptocurrency exchanges. The company's goal is to bring blockchain and cryptocurrency up to the regulatory standards enjoyed by other parts of the financial sector. And regulation is something the crypto market is going to need. For example, last year, the IRS subpoenaed information from Coinbase regarding transactions it processed for 14,000 Coinbase users. It's only a matter of time. And Cash is building software that can help keep users compliant. There needs to be a company like Cash that takes regulation seriously. And Cash has acquired proprietary software that analyzes the blockchain to determine accurate valuations for every input and output comprising a transaction. Once a value has been assigned to every transaction, the service can report the current total asset value, income, and any realized gains or losses. This will help keep crypto markets regulated, preventing fraud.
Think of this aspect of the company's business like QuickBooks for Bitcoin.
The company's stock is like a crypto basket. As the firm's profile grows and it diversifies its holdings, Cash could function something like a crypto ETF, offering investors the diversity of different aspects of the crypto market. If Cash reaches full capacity at its Montana facility, it will be mining crypto at a rate of nearly 20,000 MW per year. At current Bitcoin market value for Bitcoin mining revenue, that could translate into $200 million in annual revenue. All for a firm that has only a $45 million market cap. Cash's acquisition of Node40 will allow it to navigate the choppy waters of the crypto market. Regardless of the fall in prices, the number of crypto transactions are on the rise, which means that investors will need a firm with Cash's skill set to navigate the new economy. Once you throw Cash's proprietary accounting software into the mix, the potential starts to look really appealing. Demand for regulation in the Bitcoin market is likely to shoot up in 2018 as Wall Street embraces the crypto revolution. That means that a company like Cash with its own crypto regulation software could charge a premium for its services, especially if it becomes the industry standard. Considering the value of the whole cryptocurrency market is currently about $640 billion, Cash's regulatory software could eventually be worth a lot more than it is now. In short, Cash TSX, Cash V, OTC, HSSHF provides smart wide exposure to the crypto market, from mining, to cryptocurrencies, to crypto assets, and software, right in your stock trading account. By Ian Jenkins ***. Important. By reading our content you explicitly agree to the following. Please read carefully ***. Forward-looking information. Certain disclosure in this release, including statements regarding the performance of the company's current and ordered rigs, and expectations regarding future operations may constitute forward-looking statements. These include that Cash will dramatically increase operations, that the 5,000 rigs will be successfully ordered and delivered, the 5,000 rigs will perform as expected by management, and the timing, installation and performance of Cash's current and ordered rigs will be consistent with management's expectations, that mining capacity will increase to 8.7 megawatts, that Cash will utilize its committed Montana facility space and increase capacity to mine 20 megawatts, that Cash will hold a diverse portfolio of cryptocurrencies through mining and otherwise, and that Cash's software can become part of a regulatory push for regulation of cryptocurrencies. The forward-looking statements in this release are subject to numerous risks, uncertainties and other factors that may cause future results to differ materially from those expressed or implied in such forward-looking statements. Such risk factors may include, among others, the risk that the 5,000 rigs will not be successfully ordered or delivered from the manufacturer or, if delivered, not when expected by management, and the risk that the company's current and ordered rigs will not perform as expected by management or that expected capacity is not achieved, that Cash may not earn cryptocurrencies through mining and may not be able to purchase them, risks related to changes in cryptocurrency prices, and the profitability of mining them, that cryptocurrencies will not increase in use as expected, the underestimation of personnel and operating costs, that Cash will not receive required regulatory approvals for building new facilities, using power, or other aspects of its business, that cryptocurrency regulators don't accept Cash's accounting and other solutions, the availability of necessary financing, permitting of businesses that Cash intends to invest in, general global markets and economic conditions, uninsurable risks, risks associated with currency and cryptocurrency fluctuations, risks associated with competition offering better or cheaper solutions, attracting away employees or using tactics to drive out competition, risks associated with changes in the financial auditing and corporate governance standards applicable to cryptocurrencies, risks related to potential conflicts of interest, the reliance on key personnel, capitalization and liquidity risks including the risk that the financing necessary to fund continued development of Cash's business plan may not be available on satisfactory terms, or at all, the risk of dilution through the issuance of additional common shares of Cash, the risk of litigation, the risk that Cash's management and advisors may not contribute as much as expected to the company's success, the risk that cybercrime may severely damage the value of any or all of Cash's investments. There may be many other factors that cause results not to be as anticipated, estimated or intended. Accordingly, readers should not place undue reliance on forward-looking information. DISCLAIMERSPAID advertisement. This communication is not a recommendation to buy or sell securities. This communication is for entertainment purposes only. Never invest purely based on our communication. Gains mentioned in our newsletter and on our website may be based on end-of-day or intraday data. In most cases we are paid by the issuer or a third party to profile the issuer. In this case, Hashchain Technology Inc. Cash is paying to safehaven.com $80,000 for this article and certain banner ads. We have not investigated the background of Cash. The third-party, profiled company, or their affiliates may liquidate shares of the profiled company at or near the time you receive this communication, which has the potential to hurt share prices. Frequently, companies profiled in our alerts experience a large increase in volume and share price during the course of investor awareness marketing, which often end as soon as the investor awareness marketing ceases. The investor awareness marketing may be as brief as one day, after which a large decrease in volume and share price is likely to occur. We do not guarantee the timeliness, accuracy, or completeness of the information on our site or in our newsletters. The information in our communications is not researched or verified in any way whatsoever to ensure the available information is correct. Disclosure. Safehaven.com, Advanced Media Solutions Limited, and their owners, managers, employees, and assigns, collectively, the company, does not make any guarantee or warranty about what is advertised above. The company is not affiliated with any specific security. Share ownership. The owner of Safehaven.com owns shares of this featured company and therefore has an additional incentive to see the featured company's stock perform well. The owner of Safehaven.com will not notify the market when it decides to buy more or sell shares of this issuer in the market, but will not trade on material information that has not been disclosed to the public. The owner of oilpatch.com will be buying and selling shares of this issuer for its own profit. This is why we stress that you conduct extensive due diligence as well as seek the advice of your financial advisor or a registered broker-dealer before investing in any securities. Not an investment advisor. The company is not registered or licensed by any governing body in any jurisdiction to give investing advice or provide investment recommendation. Always do your own research and consult with a licensed investment professional before making an investment. This communication should not be used as a basis for making any investment. Indemnification, release of liability. By reading this communication, you agree to the terms of this disclaimer. You further warrant that you are solely responsible for any financial outcome that may come from your investment decisions. Past performance is not indicative of future results. Investing is inherently risky. Don't trade with money you can't afford to lose. This is neither a solicitation nor an offer to buy, sell securities. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this website.